Hi guys, good afternoon and welcome to Moneycontrol. I'm Karunya Rao and with me is Manisha Gupta, and energy pack is in focus, and it's lost a fair bit of steam, whether it's coal, crude oil prices, natural gas, gasoline. They've all corrected a fair bit. So talk to us about crude oil first, which is one of the most important commodities to be tracked out there. So what's really pulling it down?
So a couple of things, the markets have been very jittery about on what would happen, whether Europe will have enough gas to take them through winters or not. And we've seen milder winters, and we've seen enough and more gas availability into the world. And even now, with much of winters done, we are at the end of January right now, and they have a capacity which is 74 to 78% full, which is higher than what they were last year or even at a 5-year average. So that is what has led to the prices coming down, and the biggest declines clearly have come down in case of natural gas. Crude oil prices, the other thing is that Russia continues to produce and export enough and more crude. So even as we are trading at $85 per barrel for the Brent prices, the Russian oodles are trading at a $60 a barrel, and what they are giving to China, India and other Asian countries is a discounted rate at even those levels. So we are perhaps getting crude at $30 less than where Brent is trading right now. So the markets are looking at enough availability. The sanctions hadn't had that much of an impact. The Chinese demand has just started to pick up, and we might see support because of that. But as of now, much of that has been factored in. The weak US dollar index is another thing to watch out for. So all of that is weighing onto the market.
So what is the reasonable range, the new range for crude?
So markets do not believe that it's going to go below $80 for that matter. We seem to be holding quite nicely at 85. WTI, yes, is meandering around that 79, 78 to $82 per barrel a mark. So that is where a range that can continue to stand. If you look at the Russian exports for the month of Jan, they are 50% higher than what they were in December. And the Chinese imports also have continued to jump up. Feb also promises to be like that, the kind of contracts that have been drawn. So markets are anticipating that current levels is where you will see consolidation happening.
All right. And what about natural gas prices? Again, is it because of abundant supply, or are there other triggers?
That is one, that Europe has enough supplies. Two, US is back to exporting record numbers as well. So there is enough and more coming in from US as well. And the markets do believe that if in December, during December and Jan, during winters, you've seen these prices. So once the weather starts to ease off, you could actually look at some more decline. So are we close to bottom? Yes. But are we at the bottom? Maybe not.
Oh, so there could be a further decline. In fact, do you think that, same around 8-9 months ago, there were so many concerns about not having enough supply, and we saw the prices run up very, very sharply, and things really went haywire, of course. But now it is because of the milder winters that people are now starting to realize that we may not need as much as we anticipated, and there is just about enough and more perhaps in some cases.
Oh yes, that is the case, because there is enough and more storage capacity, and US is producing at record numbers, with the expectation that US production could hit another record when we get into further months going forward from here. The other thing is that even as the Western world or G7 may not be buying directly from Russia, but remember, China and India are importing enough, and the products are being exported to Western
everywhere else.
So it's become a cycle, directly or indirectly, but there is availability, and that's what's coming into prices now.
Okay, so if you are looking at natural gases, Manisha says the bottom is not here yet, and we could see some more correction as the seasonality factor kicks in and winter starts to ease off further. But let's talk about coal, which is also down about 10-11%. What is the driver there?
So for coal, China is the major factor here. Europe as well, because coal prices were rising because gas was getting so expensive. So we saw all-time highs in case of coal in 2022 because gas was trading at $10 per MMBTU in the month of March. Then by the month of December, we were at $7. Currently, we are trading below $3 for gas. So from $10 to below $3 is where gas has come. So the coal price is also easing off, is not such a big, it perhaps is taking cue from gas, because gas is as cheaper and the availability is as enough. So is the reason coal, the kind of the panic, the surge in demand, the hoarding that we saw in coal also seems to be going away now.
So does that mean things are not looking very great for coal either in the near to medium term?
Which is good news, yes, because Europe and India and China were consuming so much coal. But with the gas prices now easing off, coal prices also are following that suit.
So will the consumers see any meaningful benefit?
I would think so, yes. Nobody is expecting coal prices to surge from here on.
So within the energy pack, then crude continues to be the most attractive and promising.
It does.
And the others clearly not so much. With that, it's a wrap. Thank you guys for tuning in.